So hi everyone. So we're going to talk about what's next for institution in the digital space today. First of all, I think we can have a quick introduction for all of us. So maybe Andrew, you want to start? Microphone from Andrew not working.
Hello? Oh, okay, there we go. Thank you. Andrew Robinson, thanks so much, Thibault, from Coinbase. I've been with Coinbase for the last 5 years, based out of London, looking after the institutional sales business there. My background prior to Coinbase is largely traditional finance. Started off trading interest rate swaps at Lehman Brothers, moved into cash equities, trading, then sales. Took a brief stint away from finance and strategy consulting, what brought me closer to Bitcoin and to cryptocurrencies. I was working with sovereigns in the Middle East and corporates in Africa, advising about rotating out of oil and gas into technology. That eventually led me to AI and Bitcoin in 2016, before I decided to join Coinbase full-time in 2018 to build out the business in the region.
Manuel or Valérie, as you want.
Hello, there we go. Manuel Nordeste, I lead the digital asset business for Fidelity outside of the United States. Similar to Andrew, I come from a traditional finance background, different famous Wall Street firm, a slightly different way into the space, but equally had some reasons. So I used to run market infrastructure, and a lot of the time that included awkward phone calls in the middle of the night because money doesn't move across the world quite fast enough. And so that was kind of, for me, the reason I had a light bulb moment and kind of started thinking about Bitcoin and crypto more widely as a technology that could really solve some of those initial problems. And so I stayed in traditional finance until 2020. And at that point, I moved to Fidelity Investments to kind of dedicate my career full-time to digital assets.
So hello everyone. So my name is Valérie Noël. I'm a head of trading of Bürki, which is I'm still in the traditional finance, actually. My expertise is more on equities and derivative. I'm a trader since almost 30 years now, and we decide to offer a solution for a client to trade and custody crypto in a traditional finance. So we just finished the project we launched last December. So I'm here to talk about that.
Great, thank you guys. I have a specific question for you, Andrew, maybe.
Yes.
What's the vision at Coinbase?
Yeah, I think like when I step back and zoom out and think about the institutional vision at Coinbase in particular, we spent the last 10 plus years at the firm building institutional products within the digital asset space that are native to the features that are required for cryptocurrency, so things like custody or financing or staking or governance or whatever it may be. But I really think that there's 3 pillars that we lean on. 1 is to be the easiest to use product, 2 is to be the most trusted, and then 3 is to be that Web3 bridge. And so if I kind of think about, Banksy's or Valérie's role, it's kind of like if we want to be in the middle of that, right? So your book ended. And so on one end, you have the deep TradFi institutions, and then on the other end, you have the deep kind of Web3 crypto native space. And so at Coinbase, we want to serve that middle. So everything from being a true prime broker to offering financing to having our exchange product and bridging that gap. And so if you look at one of the partnerships that we announced last year, like with BlackRock and the Aladdin system, that would be the deep TradFi end of the spectrum. And then bridging that with some of the crypto native and Web3 products that we offer, such as like a self-hosted wallet, and bridging that, making it work seamlessly and as easy as possible in that trusted manner.
Okay, thank you. Now, Valérie.
Yes.
At Bürki, you have been building and offering right now a custody and trading, right?
Yes.
Since December, correct?
Correct.
Was it easy for you?
No, it was not easy. If you listen to all the panels since this morning, is to find this bridge between the traditional finance and this adoption of traditional finance. So actually, we start 18 months ago. It took us almost 18 months ago when we had demand of client. They wanted to be exposed on Bitcoin and Ethereum, or client or children of the client. Actually, probably more your age than mine. And then we said, well, we need to consider this as a as an asset class. It has to be a new asset class. So we need to build something. So at that time, we could only offer to client ETP, ETF. I don't know if you're familiar with this, but it's product it's listed, you can trade on the market, and it's backed by crypto. But we said, no, let's make the adoption happen. So in Switzerland, we're quite in advance with our regulator, FINMA. They help us. I mean, they classify, actually, they made a law called DLT law in August 2021, where they classify the token, utility token, asset token, and payment token. So that starts to give us a framework to work with. And then, yes, we need to ask them what we wanted to do. So we start with payment tokens. So we can only do 4 tokens for the moment. But then, yes, it's not a trading project. It's risk management. It's risk department, middle office. It touch legal. It touch all the bank. So we are middle-sized, very small bank. So for us, maybe it was more easier to navigate in all this framework. And people, we had a real project team, 5 people, very consistently every week doing the project. And then, yes, finally, so it was not that easy, but with FINMA, with technology, with counterparty, we were able to do it. And now we're quite happy with our solution.
Okay, thank you very much. Manuel, I think Fidelity was one of the first ones into these digital assets classes, right? Tell us maybe more about that.
Yeah, that's right. You know, it was very early on, and you know, even today, putting Fidelity Investments and the word crypto in the same sentence is quite a strange concept for a lot of people. But we didn't, you know, at Valérie's point, you don't just sort of wake up one morning as a large financial institution decide to do this, right? You kind of organically build up the expertise. You certainly need, you know, the senior commitment, and we're very lucky to have had that from an early point. But really, our research started in about 2014. We didn't launch Fidelity Digital Assets as a business until 2018. So it took us about 4 years really to do the research, build out the teams, understand, you know, to Valérie's point, who are the right counterparties out there in the market. And frankly, that was kind of part of the reason we eventually built a business. Is if you look at the infrastructure back in 2015, 2016, in terms of liquidity provision, you were starting to see the first signs and the first players of institutional quality coming to market. In terms of custody, there was certainly a lot of developed retail offerings, some of them starting to sort of retrofit and look at the institutional space, but there was very little in terms of dedicated sort of institutional custodians. And so we had kind of the expertise in-house. We have a very large custody business, particularly in the United States. You know, we felt like we'd done enough research at that point, and so we decided to launch the business because we thought there was a gap in the market that we could help with.
What was the main obstacle for you at Fidelity? If you can mention one thing.
Yeah, I'll mention sort of the 2 sort of big words with any sort of big financial institution is risk and compliance, right? It always is, but at the same time, you know, it's kind of what we sell, right? Like our product is, you know, is essentially our controls and that experience we bring from the old world, but into this new technology and the new business models that are emerging, right? And so risk and compliance really is at sort of the forefront of everything we do.
And what's your solution about that?
Yeah, so currently we now do a few more things. So we started with that custody offering. Very quickly, our clients were coming to us saying, okay, you're keeping my assets very secure, but if I need to take them in and out of your custody to go and trade, that doesn't help me very much, right? So I still have some at risk. So we built a few brokerage services around it. We now have sort of a full brokerage platform. We do have a lot of sort of external direct clients, all institutional that use that platform. But we also have some internal clients now. So there's other parts of Fidelity that essentially use our services. So you have, we have a retail brokerage offering in the US. We have a digital asset management affiliate that essentially puts together fund products with digital assets underliers, and more to come as the rest of the machine continues to work.
Okay, thank you, Manuel. For you, Andrew, maybe what are the next step for you? Generally, the next step for Coinbase.
I think that the next steps is is a lot of the same, right? Which I hope doesn't sound boring. And let me explain that. And what I mean by a lot of the same is that if you zoom out, 2022 was a tough market for all risk assets, right? Not just crypto. We had rising interest rates. We still have rising interest rates in many parts of the world. We have rising inflation. We had poor corporate earnings. And so, we've been through this cycle as a company now 4 times. I've been through it now myself 2 or 3 times. And in terms of what's next, it's being heads down in moments like this and refining your strategy, kind of retweaking your approach, and continuing to build the products that your clients need and also products that are going to move the market. And so, unfortunately, as a publicly listed company in a quiet period, I can't say what any of those products are. But I think that if you think about the infrastructure that's still needed, to Manuel's point in the space, it's a lot to do with like risk management around financing and things like how you think about that. How do you continue to consolidate liquidity in the space? How do you make the custody products not necessarily safer, but also quicker, right? So you can get assets out. So a lot of kind of that refinements around the edges that for the type of clients and institutions that we're dealing with, that they need to be able to participate in this space in an effective and efficient way, the way that the other capital markets, such as equities and fixed incomes and commodities and currencies operate.
Okay, you want maybe add something, Valérie, for the...
No, I agree. I mean, you have to follow what your client wants. I think that's actually we are in middle with the final client, and then we go to Coinbase to trade. So you need to listen what they need, but you need also our mainstream, it's regulator. I mean, you can see everything you want, we decentralize. It's regulator, we are regulated private bank, so we're gonna follow what they said. We're working with them, not against them. And I think that's one of the, keep going like that.
And what's the biggest challenge upcoming for this year, next year's maybe? Manuel?
Yeah, I mean, there's a few things. We tend to be, or we try to be as data-centric as possible, right? And it's actually one of the things that I think in this space can be difficult is you have a lot of sort of blockchain data, but actually in terms of institutional research, it's relatively limited. So we actually put a little bit of that out in the market, and most of it is completely free, by the way. So we, it's kind of part of the educational piece. And so we do this, anyway, we do this institutional survey every year. We employ an independent surveyor. They go and survey over 1,000 investors globally and ask them not just, do you have some crypto in your portfolio, but really a little bit more around, is your perception positive or neutral or negative? If you're not invested yet, are you investing in a year, in 3 years, or in 5? Investing directly or via product, and so on and so forth. One of the things that we asked about is obstacles. And this year it was a really interesting year because it was also the first year we ran it during a very bearish market, right? So we ran it sort of across in the middle of 2022. And previously we'd done 2021, very bullish, and then the 2 years before it was sort of flat market. And so we were quite curious to see this year. One thing hasn't changed, actually. So main thing that people quote, 50% of investors, I think, or thereabouts, it's volatility. We actually thought it's gone up a little bit because the volatility this year has been downwards. But interestingly, institutional investors also consider volatility to be problematic, even if it's on the way up, right? You want to have levels that you can manage. Otherwise, the risk management just becomes a little more complicated, depending on the type of institution you are, of course. And then there's a list of kind of lots of other things that stated about like 30 or 30 a bit % of investors quoted as a concern. They all fall into sort of 2 large buckets. One is regulatory related. So it's things like in the US, regulatory classification is something a security, yes or no, market manipulation concerns, and so on and so forth. The second bucket is actually what I'd classify as immature institutionalization. And what I mean by that is things like, people are concerned they don't have good valuation models, right? And that's something that institutionalization brings to the table. People should be able to understand, okay, I now want to invest in this asset. What is cheap and what's expensive? Like when, what is cheap and not expensive for your own models as well? It's things like education. So particularly in Europe, investors in Europe, lack of educational resources was was a big piece. And you might think, oh, that's nonsense. You just Google a little bit, go down the Twitter rabbit hole, and off you go. Like, there's loads of great education out there. A pension manager, that's not going to be their source of education, right? You need more institutions putting out high quality content that they feel comfortable with. And frankly, as cliche this might sound, some of it is just time, right? Like, this space is, I know it sounds like a cliche that we're just at the beginning, but we really are just at the beginning. And so for some of these institutions, it just takes time. To go through an investment committee at some of these and change a mandate at some of these institutions will take, just in meetings and committees, will take about a year, right? And so some of it is, the obstacle is just these things take time.
I think that I just want to jump in because I think that's a really good point. I ran into a client today, and I had never met her before, but I had met her colleagues, and they're working on a really interesting project, and it still hasn't launched yet. And she's like, "Oh, like when did you start having the conversations?" It was 3 years ago. So to put it into perspective, it's been 3 years of chatting, so many calls with legals, with regulatories, with our compliance team, with our products team, and to Manuel's point, like, it's not that there's not progress, but with large institutions, it just doesn't happen overnight. And I think that the excitement of 2020 and 2021, maybe like even ourselves, we forgot that, but then you step back and, we're busy all day, all three of us, but you might not kind of see it necessarily in the products that are being launched or the names that are coming into the space, but the work is being done.
Thank you, guys. What would you say to a traditional asset manager who was just curious about crypto? Maybe Valérie, what would you say to
the traditional one? Well, they got constrained by regulator, especially the traditional one. So then it's quite difficult if I'm talking about like banks to like make advisory or recommendation on crypto. It's all you guys, crypto guys, you're not behind a desk, behind by Goldman Sachs, and you want not the sexy part of the fund, but you won't be decentralized. You don't want to be with someone. So it's very difficult to find in a traditional world some analysts you can hire to know if you consider that all this protocol can change your life. You have to be considered like some company can change your life with some stuff. So you need to substance, you need to understand what you're doing, understand what you're buying. And a lot of people, they just want to be millionaire. They don't want investing. But a PM need to invest, so he need to know what he's doing. And it's not that easy to find that kind of people yet.
Okay, maybe Andrew, can you say something about that?
Yeah, I think that I guess what I would say was that, in my opinion, and I think that probably a lot of us in this room and on stage agree with this, is that I have a high degree of conviction that crypto is going to broadly change financial services. And so it doesn't matter if you're a traditional asset manager or a bank or whoever it may be, or how conservative your institution is today, right? At some point in the future, and I'm not going to put a time on it, it may not necessarily even be a direct investment in crypto. It could be your mid-office or your back office moving to some of these rails and projects that are here today and that we know. And so what I would say to a traditional asset manager that's crypto curious or that's exploring is to learn. Manuel's point again, the research, to learn and to engage, because that's the only way you're going to get comfortable with the space and kind of know what's happening. And so I don't know if it's downloading a Web3 wallet or if it's just open an exchange account if you haven't done it, so that you have some skin in the game. And I know that sounds really, really basic, but it's a good starting point. And that's how you kind of meet someone that may be a crypto skeptic or may be interested in the space, but has to go through those regulatory and compliance hoops. And it's also coming armed with information for them, right? I think that in the ideal world, a lot of us would be oh, it's amazing if every bank or every asset manager just directly held Bitcoin. But maybe it's they're holding a tracker, or maybe it's another different product or a way for them to get exposure. And again, these are kind of stepping stones that ultimately get us to kind of the spot holding of crypto. But it all does, kind of all starts with that education. And I think that a lot of the traditional asset managers and sovereigns and CIOs that we speak to at these firms, maybe in 2016, 2018, even 2020, it was okay not to know what was going on or not to have an opinion. That's no longer acceptable, because you have the fiduciary responsibility to your LPs and your clients to at least have a view on the space, right? And so to be educated enough to be able to articulate a strategy. And so I think that that's kind of the way that I would approach it.
Okay, so thank you guys.
Can
I
I-
think we all will be. You want to say
I'll add a
something?
little- yeah,
Sorry.
I'll add a tiny one, which is you in this space. Well, any kind of innovation, right? But like you learn by doing. So obviously you're not going to go and allocate out of your main fund, but I don't know, like go and get a Bitcoin wallet, right? Like go and pay with Bitcoin at some shop. Like go and try these things out until you've got some skin in the game. You don't have the incentive to go and really experiment.
Thank you. So I think we're done. We're already a bit late, I think. So thank you very much for listening, and yeah, thank you.
Thank you.
Thank you.